U.S. stocks rebounded across the board Wednesday, with all three major indexes closing higher and tech stocks leading gains. The Dow Jones Industrial Average rose 238.14 points, or 0.49%, to 48,739.41. The S&P 500 gained 52.87 points, or 0.78%, to 6,869.50. The Nasdaq Composite advanced 290.79 points, or 1.29%, to 22,807.48. Stocks opened sharply lower, with the Dow down over 600 points and the Nasdaq off over 1.6% at the lows, but staged a V-shaped recovery on dip buying. Trump's announcement that the U.S. would provide insurance and naval escorts for tankers passing through the Strait of Hormuz eased concerns about Middle East tensions, sending oil prices sharply lower from their highs. Sectors diverged, with consumer discretionary and technology leading gains, while energy and consumer staples declined. The consumer discretionary sector surged over 2%, marking its best day since last October, led by Ross Stores up nearly 7%. Expedia rose 3%, while Amazon, Airbnb, Booking Holdings, and Tesla each gained over 3%. The technology sector rose over 1%, with Intel skyrocketing over 5%, Amazon and Tesla up over 3%, Meta and Nvidia up over 1%, and Microsoft edging higher. Apple and Google dipped slightly. Chip stocks performed strongly, with Micron and AMD each up over 5% and Nvidia rising over 1%. Chinese ADRs mostly rose Wednesday, with the Nasdaq Golden Dragon Index up nearly 1%. EV maker NIO surged over 5%, Bilibili and Kingsoft Cloud gained over 3%, and NetEase and Xpeng Motors rose over 1%. Decliners included Taiwan Semiconductor down over 1%, Alibaba off nearly 1%, Baidu down nearly 0.8%, JD.com off over 0.6%, Pinduoduo down nearly 0.9%, and Trip.com off over 2%. U.S. February ADP employment rose by 112,000, above the expected 105,000, showing the labor market remains solid. The February ISM non-manufacturing index climbed to 53.7 from 52.5, indicating accelerating services expansion. The Fed's Beige Book reported the U.S. economy grew at a slight to moderate pace over the past 7 weeks, with prices rising moderately in most districts, 3/4 of which cited tariff contributions. The labor market was relatively stable, with more than half of districts reporting no change in hiring. Markets currently expect the Fed may cut rates twice in 2026, with the first possibly in June. For Thursday, key focus areas include weekly jobless claims and January trade deficit data. Friday brings the February non-farm payrolls report. Also watch for further developments in U.S.-Iran conflict. Technically, the Dow reclaimed 48,700. The S&P 500 rose back above 6,800, and the Nasdaq broke above 22,800. The V-shaped rebound shows market resilience, but geopolitical risks remain. Defensive positioning is advised, with focus on energy stocks and safe haven assets, and caution on chasing tech stocks.